Good morning, everybody. Hope you guys are doing well. Taking a look at NASDAQ as usual. I sent out the daily bias for today. Basically, almost spot on with the weekly outlook. So, anticipated a run on the low resistance on the early part of the week. I want you to notice that Tuesday swept out previous day high. We get SMT at the highs with the ES as well. And then we continue to sell off, breaking an intermediate term low, and we are aggressively reaching down into the weekly order block and fair value gap and discount that was outlined on Sunday or Saturday. So I do expect us to drop into Thursday. That's our standard open, high, low, close on the weekly profile. That's our classic sell template, where Tuesday will create the high of the week and Thursday will create the low of the week. So I'm anticipating a bias of bearishness. We did have some of this low resistance liquidity up here, but since it's counter bias, it would be a little bit high resistance if we were to reach all the way up into there. So favoring a sell side move. Now, if you look at the hourly chart and we take our fib, I might actually start using this because it was quite accurate last week. But we have our fib extension, our last manipulation above the highs with the SMT. You get 2 to 2.5 down inside this daily fair value gap. So I'm looking for us to reach down into there. This is basically the same exact expansion profile we got on last Wednesday. So if you look at last Wednesday over here, let me turn on the kill zones. Wednesday open was here. No manipulation above Asian, no manipulation above midnight. We expand lower. No OTE either. 8 a.m. opens, 9 a.m. opens, and we just drop another good, what, like 100, 200 points? Yeah. So we're getting the same thing basically over here. If I mark on midnight, no manipulation above Asian or above midnight, drops, no OTE. So expecting just an expansion leg, preferably one retracement into premium during macro time, and then drop off back into sell side. We do have 9:45 news today, which I don't really care about because 9:45 news is like the weakest of the three times. 8:30, 10 o'clock, and 9:45. It's like 9:45. Normally does not have a huge impact on anything. So obviously we got this dealing range here. We're looking for SMT at the highs if preferred. I don't see anything here. Obviously we don't need it since there was SMT on the higher time frame. That's what. And we do have some SMT here, which it's YM. So we'll see how long that wants to hold. We'll keep that pulled up for now. So obviously your dealing range would be between the 930 high and then this low. Obviously we got the fair value gap here. Actually, we'll leave that on. And then the daily imbalance down here with 2 to 2.5 reaching basically into consequent encroachment of the daily imbalance. So I'm going to mark this out as an IRL. And we'll look to trade into potentially 50% of that gap. Did I send out the fib extensions on? No, I did not. Okay, I'll put in predictions chat really quickly. So basically, if you think about this, ICT explains it where if you think about this fulcrum point as a door hinge, and you start here where consolidation is, then you manipulate. You take this range and then move it down, you completely swing it, it'll be to the -1. If we're bearish and we have a bearish, like a higher time frame bearish bias, and you have this bearish breaker, it's likely that you're going to have two manipulations. So 2 to 2.5 is really like that sweet spot for most ranges. We're either going to retrace or reverse inside this range. And if you look up your swing grading techniques, There's a bunch of people who have made videos on it. I haven't made one separately, but there's plenty of content you can find. Make this an IRL. We got SMT with ES on the highs on the 4-hour chart. So you look at the 4-hour chart, or even the 1-hour chart. Look at the low resistance that we had marked out on Saturday, and then take a look at ES. We have SMT here. Slightly with premium. So let's take here. Let me zoom in here. If you go to the 4-hour chart, it'll be easier to see. So notice the manipulation. That's what I'm more concerned with. On the lower time frames, you could see it too. I have to look at the 15-minute chart really quick. So there's your first 15-minute candle. We didn't get a closure back below the sell side like you normally want to see. Obviously, ES and NASDAQ are extremely weak, trading into their fair value gap here from, what was that, 8:15, and then selling off. You probably have a 1-minute market maker sell model from that too. Very, very kind of rough, but it is one nonetheless. Actually, we would have gotten stopped out on the 9:30 high. So you have some premium SMT here. Oh, no, we didn't reach the premium yet. So there's a couple things today that allows us to be a little bit more cautious. Obviously, the large overnight move is always going to be a little bit more difficult to trade in the AM session, especially when there's no clear manipulation. 275 off of first 15-minute candle. So if you see expansion, you can see consolidation for the next session. And then any retracement in this case, like if we were to retrace back up to London high, the reason I'm not liking that is because retracement legs will always fill the gaps that it creates on the way there. So if we have a bullish dealing range, sorry, actually, we have a bearish dealing range here. If we were to come up and fill this gap, any bisis that we form on the way will be completely refilled, and then we sell off quickly because you have low resistance sell side liquidity here. That's the same thing we got for the past 2 days on the higher time frame chart. If you look at the 15-minute, we had a open high low close anticipation for the week. So if you look at the buy side liquidity, all of the gaps that we were trading into, actually the hourly chart's a little bit better to see, were basically completely filled. So you have a bisi here completely filled, here completely filled all the way down, here completely filled multiple times because it's all against the higher time frame bearish bias. Then eventually you create sibis that won't be completely filled because that's the actual expansion. The displacement wants to be to the downside. So if you want to identify what's the difference between a reversal and retracement, it's going to be when we fill gaps on the way, like which gaps are there more space in, I guess is the best way to look at it. Like obviously we're displacing here. If we form bisis that are all the way through it, then that's your breaker, and you have BPRs down there. BPRs are extremely, extremely strong most times in helping facilitate a stronger bias. Like the fact that we can't even see here. Here's your giant BPR. Inefficiencies, we've been creating bisis all the way up, and then boom, we close all the way through it, and more importantly, we close through the bearish breaker, which is your CISD. Anyways, you're approaching macro time here. You can see the 9:45 news did absolutely nothing. So whenever you see that on the economic calendar, it's not a big deal. And you'd like to see this for the short term used as an inversion gap. Just for the short term. Trade up into it, tap back, reach into premium, and then sell off into the daily imbalance. But this is very similar to what we got on last Wednesday. If I pull up, let me go back really quickly to last Wednesday's chart on the 1 minute. I want to show you exactly the profile that we got in the morning. Like this, okay? Here's your 9:30. Opens, slight retracement, and then makes drop into macro time. And then you have a singular fair value gap in premium. This is a continuation profile. So you're not going to get like selling high, buying low, which is kind of annoying. But there's your fair value gap reaches up into premium. Notice how all the bisis are refilled on the way up. It kind of stalls, fills this gap completely. Same thing with this one. And then sells off. So that's the kind of profile I'm looking for. Except we do obviously do have a larger gap here. And I'd actually like for it to reach up into some sort of an order block, or we turtle soup the high. So if we were bearish and we do reach up into here, two different kind of entry techniques I'd want to see is either a stop run, you have a short-term CISD there, or we have to reach up into these last two down closing candles, which is the closest order block. I wouldn't prefer if it reached all the way up into here, although that is the bearish order block that started to move lower. That is quite far into premium. So like if we got this would be preferred. Turtle soup drops down. You have a CISD on here. Something like that. CES is trading lower, which is a good sign. I think ES is leading the pack. Yeah. Now, even with continuation entries, there's got to be some sort of a short-term dealing range that we're retracing back into premium. So like this kind of short, although it may produce like 20 points, I don't like this at all. Like the fact that we're not going to reach into premium, there's only one reason that we shouldn't reach into premium if we're bearish, and that's if we have a bearish breaker, right? Like over on the 15-minute chart again. Although we actually did reach into premium here. No, we missed it. But that's also because we had the breaker. So notice the same thing. We're getting these bisis efficiently filled completely before the retracement leg. So I'd like to see high resistance up into here. I'm also watching this order block. It's low probability, but cycle time frames, the 5-minute gap. But a day like today, I'm also fine with just staying flat. We've got Thursday, Friday. I think both have 8:30 news. Let me look. Yeah. 8:30 news tomorrow and 8:30 news on Friday. So this filled at a 954. That's standard. Do we? Well, there's some pretty clear SMT on the highs with the YM running out London session high, trading lower. So that's pretty obvious SMT, I think. So here's 954. Or within macro time, we still got, what, a good 16 minutes for it to retrace into premium. But there's no short-term dealing range even below this. If there was a short-term high here, and then it dropped, or actually, if it was a short-term, it was like this, and then we dropped to here, then this would be a dealing range. Right, your dealing ranges, if you don't know how to draw them out, are always going to be buy-side sweeps to sell-side sweeps, or buy-side sweeps to your most recent low. So like if you have something like this, this is a bearish dealing range. Your bullish dealing range is going to be a sell-side sweep first, up to the wherever the present high is, or the new high. There you have a bullish dealing range. So there was no new high here. We did get a slight stop run on this high, so that creates a bearish dealing range. Also, you can see the turtle soup there. It's never good to come in with expectations to the market, because a lot of times when you have expectations that they're not met, that gap in between reality and what you were expecting sometimes can produce more emotions than necessary. So even on high probability days, you should not be anticipating or expecting that you're 100% going to take a trade, right? If there's an 8:30 news day and it's like a Thursday, like tomorrow, and it's still rough price action like this, same kind of mentality has to apply, where you're a little bit, not stalling, but waiting to see if there's more information to convict you of a trade setup. Coming into a day like today with very, very low expectations will help ease the mental stress a lot. Because if you come today and you're like, all right, I know there's really not going to be anything that I personally like, or my model may not be there. So if my model is not there, my decision is going to be not to take a trade. And you get paid on making right decisions. And it becomes a lot easier when you realize all you have to do is just follow the set of rules that you've made for yourself, and that's it, right? It becomes boring because you do the same thing over and over and over and over again, and there's no variance in it at all. The trade's there, you take it. Trade's not there, you don't take it. Here's this amount of risk you use. It's very set in stone rules. And a lot of times in the intermediate process, we tend to complicate it more. Like when you start learning trading, it's very simple. Oh, you wake up, you click buttons, you make money, and then you leave. Then there's the intermediate phase where you have to learn everything, and then you're trying to make everything super complicated. Then there's the later phase where you realize all you got to do is list out a set of rules, have your model that you deeply understand, and then you just do the same thing over and over and over and over and over again. And you get paid just because it's a job. You treat it like a business, it'll treat you well. So we do have a short-term dealing range here. We have a slight buy side sweep. And then obviously the new low. And obviously this fair value gap is in discount. So we would have to retrace back into the order block for me to consider anything. But this sibi was never flipped to inversion, and we're just dropping lower. And continuation days are notoriously more difficult, so don't feel like this is an easy day. Like last Wednesday is extremely difficult. It's tough because as ICT traders, and even if you don't even use ICT and you understand like AMD or Power of 3, you want to see some sort of manipulation on the other side of the range. When you don't get that at all on the daily candle, it's really hard to trust that we're just going to continue to drop lower, and that this isn't just a prolonged Judas swing, right? But that's something you have to just deal with. These continuation days are normally kind of rare, where we don't have a clear open high low close or open low high close. So being able to sit through them and just learning something from it, the market is always going to offer you learning opportunities, either to grow your mental capital or to grow your physical capital, or both at the same time. So take those opportunities as they are presented. Every day you should be showing up and expecting to learn something mentally about yourself or growing yourself mentally. I'm going to mark out this short-term dealing range just because I want to see how we react to potentially this bearish order block. I don't think we have we have a 2-minute. The 5-minute looks the best. Still not reaching a premium. Making exceptions to your rules as well is not going to benefit you in the long term. So thinking that, oh, this day is different, or oh, this FOMO entry is different. When you start doing that, you're cheating yourself of actual experience. Because then that day is basically just another day where you skipped out on the learning and you just fall back into the same mistakes, right? Because all those days where you decide to break your rules or you over leverage or you over trade, it's really, really hard to learn anything about it because you have all of this baggage that you carry from that day in the forward. So even if you were to like completely just not touch the charts, by the way, now you have a premium. See how we react to this value gap and preferably above 19,528. Like if you just did an experiment where you did not demo trade, you did not trade your evaluation, this is going to sound tough, but you didn't touch anything, just tape reading for 2 weeks straight and marking out the gaps, not even using this tool. Okay, I know some people like to use this when they're demo trading. Don't even use this tool. Just simply just sit there and watch it. Anticipate which gap it's going to fill, where it's going to go. If it does it, nice. If it doesn't, who cares? But you learn to build up a lot of like, I don't know, mental strength, or just you don't care as much because you see it happen all the time. And it's not like you have to be in the move because you're doing it for 2 weeks where you can't even physically jump in. All right, so we got 8 minutes left. 7 minutes left, I guess. And still no retracement in the premium. And the same kind of profile we're getting in the morning where it's very, very minute Judas swing above 9:30 open, above 8:30 open, and a continuation down. Now, if we continue into 10:30, what you can see is a London close reversal profile, which is basically where we have an extended range between 9:30 and 10:30. We will consolidate for about 10 minutes, sometimes longer, turtle soup the low, and then retrace back into premium of that AM range or possibly of the daily range. So what you'll see is basically 9:30 will open, very slight Judas, expansion into 10:30. You can chop like this. We turtle soup the low and then back into premium of that AM range. And this is a specific AM profile that ICT has released, I think in core content month 7. Not how much, 100% sure. So we just tag the daily imbalance. We're looking for 50%. But if we displace above these highs and above this order block, think about this as a higher time frame discount imbalance. We're trading into it. We have a market structure shift. We potentially could look for premium, which would be this gap. So got to be kind of careful around shorting right as we react off a daily imbalance. Although the bias is bearish, I think we'll still dig further in. Look for how we displace within this gap. It's very comfortable to do that to such a degree, may be reluctant to even think of executing. But that, to be honest, that's the mindset you should be in, where like executing is just another kind of task to do. You don't get any dopamine out of it. You don't get any spike in emotion just because you're clicking the button. But I agree. Sometimes that it can be difficult as you come out of that phase, because then you have even more fear related to pushing the button in real time. I agree. So it's like a balance that you have to keep. Is you have to have some confidence. You can't be overconfident, but you can't be low in confidence. It's like you have to be perfectly confident. Overconfidence creates greed and overtrading and overleveraging. Low confidence creates fear. You have to be right in the middle. I'm gonna keep recommending the book Mental Game of Trading by Jared Tindler. Is one of the best books that you could ever read on market psychology. Please, please just read it. Especially if you're struggling, or especially if you think that nothing is changing and you need something to change to be successful, just read the book. It'll take you a week max, probably. Take notes on it, read the book, and then start applying it. It's literally like a cheat code. No trades for me today. Tried on YM, was cleaner, but just got melted. No entry. Yeah, I know. I didn't even look. What are these guys doing? Jeez. It's a little bit better. We actually have to clean Judas swing. Here. It's called the, I'll type it up here. If you want to get the book, it's called The Mental, I can't spell, Game of Trading by Jared Tindler. I have okay. I was kindly given in this prophecy chat a PDF of the book. I don't know where I got it from. Hypothetically, if I sent it into here, it wouldn't be my fault. But let me see if I can find it. There we go. So you didn't see anything, but you could download that. I'm pretty sure on PDFs you can even highlight stuff now. Download that, get a notebook out, and just read it. Don't be distracted. I know reading in 2024 is kind of hard sometimes with all the distractions around, but throw your phone in another room and put it on D&D, and then get to reading. It's like 300 pages, I think. All right, so we're ending off macro time. I don't like taking trades near the end of macro time. It's really like 9:50 to 10:04 is where I like. The sweet spot on the macro time is 9:52 to 9:58. So if I don't get an entry between that times, I don't really like anything outside of it. And we're kind of just wicking around here. So I really don't think I'm going to take anything today. I'm going to actually just close out. Let me close up Chrome really quick. There's nothing in here that I'll like. And here we go. So anticipated something like this, low probability day. Not low probability, but no entry. So for me, that's low probability. ICT on a Twitter post one time said it's more important to know when not to than know when to. I may be misquoting him, but there's more importance in emotional stability that's resulting from knowing when not to click the button than there is in knowing when you're settable form. So if you're struggling, or if you're like right around break even, you must figure out what are the profiles and what are the days and what are they. How did you? This guy just pulled it up super quick. Yeah. So there's the quote. You have to figure out what days that the setup is extremely difficult, or not even the days where the setup is extremely difficult, days where you're more emotionally prone to make a mistake. So that may be, for instance, maybe like something like a Monday without news. You may be very prone to getting chopped up on a Monday's price action, right? Because all of your emotions are produced by you observing. And if your observations have gaps from expectations, just like how reality has gaps from expectations, then you'll make more mistakes. So when you figure out basically, because the best traders, think about what they do. They aren't more of a robot than you are. It's not like they block out their emotions. They just understand and they have self-awareness of what their tendencies are as a person. So if they understand, okay, I can't trade 10 a.m. news the way I trade the rest of those days, then they're not going to touch 10 a.m. news. Because this may be a hot take, but if a profitable trader was to go into a setting where they're not comfortable in, they will still break their own rules and they'll still blow up. Right? Those guys that you see post 30K payouts or 100K payouts, if you put them in the wrong situation, they're just like everyone else. They have fight or flight techniques that keep them alive. And when something goes wrong, when it does go wrong, they'll react the same way that everyone does. It's just human nature, right? There's nothing new under the sun. So the way that one person acts as a response is going to be the way that most people react. So the only difference that they have over others is the fact that they have profiles, they have days where they like to avoid because they know that if they engage in those days, they're going to be more emotionally prone to make a mistake. So what I'm saying is this is why you have to go in every single day, even if your model's not there, screenshot the day. And then you can profile those days based on what kind of setup you like. Where was the Judah swing? Where was the entry? What time did the entry happen at? And then when you have months and months of data all lining up with each other, then it becomes really easy to just be like, okay, I was the one who put in this work. I was the one who saw all this. I was the one who collected all the data. So it's my word against my own word. No one else is telling me to trade. Because for me, I don't really like to trust other people's work when I know that I can do it. And I feel like that's just kind of an entrepreneur mindset to have. Right? Like that's probably the reason why a lot of people are even trading in the first place, is because you like doing stuff yourself. You don't like being told by anyone else what to do. You like getting the work done because you think you can do it better than anyone else, or you just have that kind of solo mindset in some sense. So what you end up figuring out is that ICT was right in a lot of stuff, like waiting for a premium run on a short, or waiting for a discount run on a short. It'll save you a lot of times from a lot of damage. And sometimes you have to you say, oh, maybe he's missing something. And then you go and find out by yourself. You mess around and you find out that he was right all along. But sometimes it's a good experience because then you actually figure out, oh, it was my own experience. So you're going to trust yet that your own advice is true. So when you go in and you study the charts, when you go in and you figure out what days your past self was very prone to over leveraging and blowing accounts, or over trading or breaking your rules, you just start pattern them all together, associate them all together, figure out what you did, and then you just throw them out the window. And you only focus on the days where it's really easy to be solvent, to be rational, make good decisions. And then if nothing is there, you step away And it's not like you missed anything. Like this kind of large move, I know we dropped what, like probably 200 points, 178 points. If your model wasn't in there, you should feel absolutely nothing, basically, that you didn't miss anything. Everything outside of your model is noise, right? You don't come into the New York session and be like, oh, that Asian session retracement, 47 points. I can't believe I missed that. There was SMT, there was everything there. It's Asian session. Who cares, right? Like you're not looking at the charts at Asian session, I hope. So just like in the New York session, just because you're showing up to work doesn't mean that you're going to have an entry setup. It's noise if your setup is not there, just like how the London session is noise, just like how, for me, the lunch session and PM session is noise. I don't care what goes on in there. It's data for me to use in the New York session, but I'm not like opening up my phone at 8 p.m. and then looking at the move that happened at 6 p.m., the opening gap at new day, and be like, oh, I could have predicted that. That is very new kind of trader stuff. If you're new to ICT, then maybe. But once you start getting seasoned in and you have a model, everything outside of it, even in the session that you're trading, is noise. CJ used to say you never miss a move that didn't have your model in it. Exactly. There's very specific details that you have to look for. If the details aren't there, it's, we're still going to have a stream tomorrow, Lord willing. We're still going to have a stream on Friday. Still have a stream on next Monday. Actually, no, next Tuesday. So there's always going to be a new day. And you have to decide when you take the trade. Don't let the market decide. It's your decisions. I don't know. I just kind of went on a rant there because these kind of days used to kill me because I would see this, I would enter in here, I would break my rules, and the problem is I would make money off of it. I would be profitable. Like it would actually go in my favor. And this is the only kind of job that will sometimes reward you for being undisciplined, right? Like if you think about it, like if you have a kid, you're not going to just occasionally let your kid run into the street to get the ball because, oh, maybe this time there won't be a car, right? Like that's stupid. You're going to, every single time you're going to remind them, yeah, don't run in there. And as soon as you see them running over there, even if there's no car, you go and grab them and you pull them away and you teach them. It's the same thing like this, right? If you, one time you let you break your rules and maybe there wasn't a car, you let your guard down. And then when the car is actually coming and you let your kid go into the road, boom, they get hit. So it's the same thing in this. You break your rule once, you allow for that slip up and you're not as sharp. You break a rule, maybe you actually make money on something like this. And there was no, if this was your model, sure. But you have to be really, really careful because it'll reward you in the wrong way. And then you just get blindsided because you do the same thing maybe yesterday. Maybe this profile is here tomorrow. And then sooner or later, you'll get hit. And it's not fun. Because all that false confidence that built up all over the time will be really, really tough to strip away. And then you have to rebuild. Because, yeah, exactly, you're building bad habits. Recently watched a reel from ICT where he said a missed trade is the perfect trade because there was no drawdown. That's true. That's why even just tape reading without demo trading is important. Because even in demo, you have emotions. And if you disagree, I'd like to debate you on that. But even on demo trading, there's still some emotion. It's not emotionless. Like even when you see like people on Twitter or whatever post large demo trades, there's still some, like even if it's like 25%, that's still emotion. Where you can feel, even when it comes close to your stop loss, you start overthinking a little bit. But it is the proper way to build real habits. I agree. Because it's infinitely less than the actual doing it. So if you build the real habits and okay, it's not like I can withdraw anything from this. It's not like your ego is attached to demo trading. Then you can actually build the real habits. For a long time, I've been saying the best trade is the trade not taken, applied to avoid bad trades, but very much also the beautiful trades during paper trades where I missed out. That's a good mentality to have. Yeah, like even on days like today, there's gonna be some times where you go back and you screenshot it and you're like, oh, I could have hit that one. Like this one. Oh, it was right in macro time, traded up into here. We already had a weak market. We had SMT at the highs. I could have gotten that one. When in reality, it's quite difficult to see it in real time. And that's why I think if you can um, record yourself watching price, that's why I'll post these recordings. Even if you wanted to go back and just mute me talking, me yapping, and you just put it on like 1.25 speed and you just watch the candles print, you'll realize, okay, I probably wouldn't have seen that because we're all the way up here. You know, we have no Judah swing above 930, very rare. We're not reaching a premium. We have obvious premium for value gap with a 5-minute order block. Like that would have been a really tough trade to make. Anyways, outside of macro time, we're just digging slowly into this gap. Very high resistance now. And I'm just kind of rambling on about psychology. So obviously we'll wrap it up here. Excuse me. If you got any questions, shoot me a DM or you can put them up in the Q&A post. Make sure to journal a day like today. If you followed your rules, reward yourself. Like you did a good job of following your rules, even if there was no trade. That's way more important. If you broke your rules, don't sit on it all day, all of next day, and be like, oh, I should have been better. Address it, screenshot your trade, win or loss, journal it. You know, what would you feel throughout the entire day? As soon as you finish off that last sentence, leave it. Go do everything else. Don't think, oh, I could have been better. I could have done this and this. Right? Just leave it. You can fix it for tomorrow, but the worst thing you want to do is just dwell on it, and then it starts kind of self-manifesting in the next day and the next day and the next day. So take care of yourself today, mentally and physically. Get outside if you can, and I will catch you guys hopefully tomorrow. Peace.